Options trading. In this video, I want to start with options trading. With options trading you can make a lot of money quickly. You can become rich in a few months. However, options trading is like gambling, there are only winners and losers. One trade can bankrupt you if you do not know what you are doing. You can trade $1 and at the end of the trade, owe $10,000. This is why I tell people that if you do not know what you are doing, do not do any options trading. Plus, because of this, in some countries, options trading is illegal. Options trading was not always like this. In the past, options trading was a way for farmers to get paid in the spring for crops they will harvest in the fall. It allowed farmers to get all the supplies they needed in the spring to plant their crops. Thus, in the beginning, options trading was connected to something tangible or physical. Now today, you can trade almost anything through options trading. If they could get away with it, they would use options trading to trade your old dead grandmother's dirty underwear. If you have enough money, options trading allows you to manipulate and control the market. The United States is the only country that allows options trading for oil and gas. If the United States eliminated options trading on oil and gas, then worldwide, gasoline would cost half as much. It is illegal to manipulate and control the market with options trading. It has been reported that some investment firms have used options trading to manipulate and control oil, gas, aluminum, gold and many other products. It might be illegal to do this, but there is no enforcement of these laws. When there is some type of enforcement, the penalties or the money the big corporations have to pay is so small that they still walk away with millions. Options trading is not the same as insider trading. Insider trading is when a person is connected to the company in some type of way. It can be a lawyer, a consultant, a manager, or a temporary worker, and they use what they learned about this company to make money. Insider trading is illegal for everyone except the members of the United States Senate and House of Representatives. That is right. The people who make our laws and oversee the regulations of these industries are the only ones who can do insider trading. This is why they might be poor when they get elected, but a year later, they are dressing better and driving new cars. They are now able to afford an image consultant, which can be deducted from their income taxes. Plus, everything the image consultant tells them to do is also a tax deduction. This is all I will say about options trading. I am not going to talk about how to do it. Just remember, if you do options trading, you can end up owing 10 times or more than what you put in. Stockbrokers. When I graduated college in the 1980s, I met a girl who said she only dates stockbrokers. Some women only date doctors or lawyers. So I guess she wanted to be different. And probably from watching Hollywood movies, stockbrokers sounded good. Mr. Kevin Samuels was right. Most women have no idea what a man does for a living, or what it takes to get to the place where he is at. They do not know about all the hard work and sacrifices he had to make to get to a place where he is making a good living. What this girl did not understand was back in the 1980s and 1990s, a person did not need a college degree or a high school diploma to be a stockbroker. This is because being a stockbroker is only about sales. Stockbrokers know little to nothing about stocks or bonds. They sell the same financial products you can buy from your local insurance salesman. The real money is in corporate sales and as a trader. After graduating college, and if you get one of these jobs, then after 7 years, you can quit and you will walk away a millionaire. This is why they only hire people who graduated from the top business schools for these jobs. To become a stockbroker, all one had to do was take a math test that lasted for about 2 hours. The only type of math on this test is adding, subtracting, long division and a few algebra problems. I was surprised by how many people failed this test. I took this test and did not finish all the problems. During the test, I decided that I did not want to be a stockbroker. We all have done something stupid because of a girl. So I walked out in the middle of the test, and I still got one of the highest scores. Stockbrokers sell products to the everyday person, or what is called the ma and pops accounts. They hire thousands of stockbrokers each year, but only about 10% become a stockbroker. Stockbrokers get paid only on commission. No base pay. No salary. No hourly wages. Thus, if they do not make a sale, then they do not get paid. It takes a new stockbroker about 2 years to build up enough clients to where they can make a living. With corporate salespeople's base salary, starting right out of college, is more than what most stockbrokers earn after working for 3 years. And this does not include bonuses and stock options. And traders earned a lot more. What many do not understand or know is that one of the main functions of a stockbroker is to sell stocks that the big clients do not want. The corporate salespeople and traders cannot sell the stocks that are about to go bad to other investment banks, because these banks also hire people from the top business schools. So they also know what stocks are about to go bad. And to keep their big clients happy, they got to get rid of these bad stocks. So they tell the stockbrokers to sell these bad stocks to their clients. The ma and pops accounts. Back then, the internet was not as developed as it is today, so information did not flow as quickly as it does today. So I do not know if this is still the same way. The corporate salespeople and traders would tell the stockbroker to push hard a bad stock. And with thousands of stockbrokers pushing the same stock would cause the stock to increase in value for about 3 months. After the corporate salespeople and traders got all of the bad stock out of their big clients' portfolio is when they tell the stockbrokers to stop pushing the bad stock. However, the value of the stock will keep increasing because during this time period, during these 3 months, other people would see this stock increase in value and want in. So they also start buying this stock. The ma and pops are happy because they think they are making a lot of money. However, in the 4th month, the stock will start to decrease in value. By month 5, the stock will hit rock bottom. The professional options traders know all of this. They see it coming. So they make a lot of money. In addition, you cannot trust anything they say on financial television shows or any financial advisor you see on television. They are doing the same thing the stockbrokers are doing. Most of the time, these people are giving you misleading information. Write down the advice they are providing and track the results for about 6 months. After 6 months, you will see that their advice was bad. This is why they never talk about it again. They never do a 6-month follow-up to prove what they said was correct. Financial reporters are also bad because they are only reporters. They know very little about stocks, bonds, or the market. They get their information from the same people who are giving you misleading and bad advice. Today everyone and their mama is a day trader. And yes, some day traders do make a very good living. Plus, many people have to handle their own investment or retirement portfolios. Plus, there is no law in the United States that says an investment bank or anyone has to provide advice that is good for their client. So they probably invented other ways to separate you, the little guy, the ma and pop, from your money. I have not talked to any of my classmates who worked in this industry in over 20 years. So I do not know about the latest scams. I call them scams, but it is all legal. The problem is that no one knows where to go and get good advice. This is because there is no place. The current system is set up to where you have to figure it out on your own. And this is by design. In the United States, all the people get a government pension, which is called Social Security. In the 1980s, Social Security had an 8-year surplus. Plus, at this time, the United States government was pushing people to save more for retirement. When you add it all together, this is a lot of money. Money investment banks wanted to get their hands on. Now, some people in the government have been pushing for Social Security to be managed by investment banks. They have been using all types of lies to justify this. Such as, Social Security is running out of money and will be bankrupt. All of it is not true. According to the law, the government is required to replace all the money it borrowed from Social Security. The only presidents that have replaced the money they borrowed from Social Security was Presidents Clinton and Presidents Obama. Presidents Reagan, Bush 1, Bush 2 and Trump never did. Plus, the state government that did have their pension funds managed by investment banks, people lost more than half their pensions. This helped many other people in government to stop the ones pushing to have Social Security be managed by investment banks. Therefore, for the investment banks to get their hands on all that retirement money, all that savings, banks have stopped providing interest on savings accounts, or little interest. This means that people now have to find other ways to earn interest on their savings. Since many do not know what to do, do not know the law, or do not have time. All of this means that it is easy for investment banks to rip you off, or take your savings.